Good morning, everyone. I'm super excited to be here with you today and our partners at US Bank. Today's webinar topic is how to manage your business cash flow. We have three banking experts who will help you understand the very essence of how to manage your business by having a positive cash flow. I'm Olivia Rios, Director of Operations and Programs at the Ally Latino Chamber. And before we begin today's session, I'd like to thank our partners at US Bank for their tremendous support throughout the years. With us, we have a team of extraordinary banking professionals, and together with a combined banking experience of over 50 years, which is to be commended for, are here to assist you to understand the importance of cash flow and the importance especially for your business. Our speakers are Liz DeBroy, a seasoned business advisor, Eddie Reyes, who is VP and Business Relationship Manager, and Jason Spriggs, Payment Solutions Specialist. I'll have them introduce themselves to you in a few minutes. Some of the key takeaways that you'll learn from today: understanding the benefits of financial management, understanding the role of cash flow and tracking your money, and options for payment solutions. We ask that you mute yourself. This session will be interactive, so you can ask your questions in the chat box and they'll be addressed after each session. And most importantly, the session will be recorded, so you'll be able to access it later on this week. At the end of the presentation, we'll welcome Maida Braga from Delta Airlines to share the promotions that Delta has for small to medium-sized businesses to gain points for travel for you, your loved ones, and your business. So welcome, US Bank team, and thank you in advance for sharing this pertinent information that's helpful to our members and community. Liz, the floor is yours.
Awesome. Thank you, Olivia. And good morning, everybody. My name is Lisbeth DeBroy. I have 12 years of banking experience with US Bank, and I am the Business Access Advisor. Joining me today is our business banking expert, and I'll go ahead and turn it over to him and let him introduce himself.
Awesome. Thank you, Lisbeth. My name is Eddie Reyes. I'm a business relationship manager with US Bank. I've been in banking for 20 plus years and really excited to have been working with the Chamber for the last couple of years. We've worked on a lot of great projects and done a lot of good stuff for them over the last couple of years. So really excited to bring some additional resources to you. We've done webinars in the past, and I think this is another one that I think you're going to find very helpful and useful to your business. So thank you, Lisbeth.
Of course. So let's continue. Financial management tools can keep us organized, and they are a critical component to managing a small business. So today we're going to take a look at an overview of business financial statements, discuss ways to manage cash flow, and explore potential strategies for a common cash flow challenges through a few scenarios. Let's continue with tracking your money. We will start out by listing some of the benefits of financial management and a high overview of financial statements. Bookkeeping basics. As a business owner moves through the business process, there are ways to make your business more efficient and profitable. Generating financial statements as a tool will help you see the opportunities as well as the gaps you may have in making your business profitable.
Yeah, really, it's just some bookkeeping basics here that how allow you to basically make sure you keep track of your finances, right? Whether it's reconciling your account books, making and tracking your sales, depositing into a business account, paying expenses from a business account, generating financial statements, or paying yourself, really, right at the end of the day. So these are really just some bookkeeping basics that all business function with, right? To make sure that they run on a regular basis. As you can see with the quick tip at the bottom, you can link your QuickBooks bookkeeping software to actually our US Bank online banking platform to really help you keep track of all of that, right? And these is really the basics to really help prepare with some of the stuff that the banks will need. We won't get too much into detail on that, but these are really the basics, obviously, in any business, right? That you got to make sure you're on top of and keep track of, right? So let me go on to the next slide here on the financial statements. Financial statements are obviously a compilation of really the statements of a business, health, right, if you will. And there's really three basic statements that you need to be aware of. Okay, the first is a profit and loss statement, also known as a P&L or income statement. It's obviously it keeps track of your revenue, your expenses, all of this good stuff, right? These are obviously really important. Banks ask for this all the time. We're always asking for interim statements for the current year or quarter or whatever that period is, right? But it gives us a sense of what your business has been doing over the last year since you last filed tax returns. So it's a great it's a great statement for us to review and look at as well. So, and then in addition to that, a balance sheet, right? A balance sheet is just basically a point in time in your business that basically segregates your assets, your liabilities. Really what you have on your books, right? What kind of debt you have on your books, right? Which banks do you owe money to, or other payments that you may have in there, right? So it gives us a really good snapshot of really where your business is at, and also tells you your cash position, right? Your cash position, what type of receivables, you have outstanding. These are all really important points that the banks, really look at. So just having a good understanding of making sure you're aware of what these are is really, really the first step of just, tracking your money and becoming a lot more financially savvy with your business. The other one is cash flow projections. I think as you probably start doing a larger, as you're from a bank's perspective, if you're looking at larger requests and you're looking at something a little bit on the larger side, and I know some of the SBA loans actually ask for this as well. We ask for cash flow projections. So what is your cash flow look like over the next several months or years, right? Really it's an estimate the money you expect to flow in and out of your business, including all your income and expenses. Most business cash flow projections, usually cover like a 12-month period. So your business can create, their weekly, monthly, or semi-annual projection here. So that's the kind of the definition, if you will, of cash flow projection. But yeah, these are all really important for banks. And again, we just wanted to make sure you guys are all aware of this. Today we'll actually be focusing on cash flow projection and how you can use this key financial statement as you're talking to banks or as you're looking for lending.
I'll go ahead and cover the profit and loss statements.
Got it.
So profit and loss statements are also called income statements interchangeably. The P&L statement ties to the balance sheet through the equity or net worth portion of the balance sheet by displaying profits and retained earnings. So many income and expenses items, they're also in cash flow and outflow, part of your cash flow. However, while profit and loss statements looks at the ability for a company to make money, cash flow looks at the ability to pay your bills. So let's look at the basic formula for a profit and loss statement. Sales, this is also called or referred to as your income or revenue. This is the total amount from selling your product or service that month or quarter. The cost of goods sold, this is the total expenditure for inventory items which customers buy. The cost of goods sold consists of cost of purchasing the items, your freight, your manufacturing costs, modification costs, packaging. For services, this may look a little different. This is the cost for providing the service. So this includes the labor, material used, and transportation. Gross profit, this is your sales less cost of goods sold. Your overhead, this is going to be all of your expenses associated with your ongoing business operations. And then your net profit is the gross profit minus the overhead. Let's continue to balance sheet. Let's look at what a balance sheet takes into consideration when displaying financial data and how it's different from the other statements. A profit and loss statement summarizes information about revenues and expenses, where a balance sheet yields information regarding a company's assets, liabilities, and shareholders' equity. It provides a snapshot of the company at a point of time. It reports assets at an original cost, not appreciated cost. And it also takes into consideration all of the items that can be attributed to its purchase, including the purchase price and such factors as commissions, transportations, appraisals, etc. So what is a cash flow? A cash flow projection provides insight into how your company operates and uncovers any cash flow gaps in the near future. Here are some of the primary purposes for this tool. Cash flow refers to all the money that goes into and out of the business. A cash flow statement displays how much money you have each month to cover expenses like making payroll or buying more inventory. It is tied to the operating cycle of the business. Businesses need to be aware of their cash flow and manage not only how much goes into the business, but also what is coming out of the business, and also timing of the money movement to ensure there is not enough cash on hand to pay for needed expenses. This tool makes it easy to review numbers at a high level. Liquidity is important to a business. This refers to how much money is readily available to pay expenses such as your payroll, rent, utilities, and your inventory costs. Let's look at a cash flow projection spreadsheet. The first section of rows titled Sources of Cash, that documents all sources of incoming cash, including your cash from customer sales, interest earned, loan funds, and your current checking and savings account balances. The second section, the blue section in the middle, covers your operating uses of your cash. This will contain all the expenses associated with your day-to-day buying and selling process. Most of these expenses will show up on your profit and loss statement. The third section, the red one down there, are your non-operating uses of cash. These are expenses not associated with operations, equipment purchases, the principal portion of loan payments, inventory, taxes, which we do not like, and owner's draw. We like the owner's draw. Subtract your uses of cash from your total cash available, and you have an ending cash for the month. Your ending cash will now become your beginning cash for the next month. Let's continue to cash flow projection statement. This is going to be our last section, and I do encourage you all that have joined to please feel free to ask questions in our chat box. We do encourage you, there's no such thing as a question that you should not ask, because there might be a participant on here today that may have the same question, or you may encourage somebody to ask a question. So please feel free to ask on our chat box, and we will definitely try to cover it during our call. In this last section, we explored a high-level overview of business financial statements. In this section, we will take a deeper dive into the role of cash flow projections and how to better track your money. So 4 ways to manage cash flow. It is important to manage cash flow of the business to ensure that the money coming into the business during a given period is enough to pay the expenses when they come due. We will explore 4 ways to manage the cash flow of the business and talk about how to positively impact the money flow. So know when you will break even. We will find out how to put cash flow management before profit, learn how to schedule your payments, and ensure that we keep cash coming in. Let's continue to the first way, or knowing you will break even. This is really important for all of us. The first way to know when you will break even in business, break even is a point at which revenue and total costs are equal, meaning the business is meaning that the business is not making neither a profit nor a loss. Each business will have a different break even number depending on your business model and how much you start up money it'll take to initiate the business. It's going to calculate how much startup money it took to initiate the business. It is important to know the break-even point, not only when you are starting a business, but also when you make a significant capital investment. Set a realistic goal for when you want to break even. This is going to vary depending by your initial investment, as well as the spread at which you sell your goods or services. Focus your efforts on setting a benchmark for projecting cash flow. Talk to experienced business owners in your area and industry ahead of time to know how much revenue and cost to expect. This is going to help you set reasonable expectations as well as benchmarks to know if you're actually being successful in your business. Here's a quick tip. Look for others to help you keep on track with your goal. A lot of businesses, we don't realize that we could really trust our bankers. We are here to support you. We want to see your business thrive. That is ultimately our goal. Talk to us. We can navigate and help you ensure that you're keeping track and know what your break-even number will be. We can continue, Eddie. So now let's put cash flow management before profit. When you book revenue, analyze the cost of producing the product. This helps you see the margin you are making on each product. Knowing the margin will tell you how many products you need to sell to have a profit for the time period. Consider that it may take several months to receive payments from your clients, depending on your industry. You may get paid immediately or over time. Make sure you know when you will receive a payment and ensure you have money to keep expenses before the payment comes in. No matter the size of the expense, make sure you track it. This will help you ensure you are aware of all the inflows and outflows of your business. Many people skip the small stuff and then they're not sure, where did all my money go at the end of the day? One good idea is to use a dedicated software to manage your finances. Though a spreadsheet may be helpful, it may not be enough. Let's continue to scheduling your payments. Our third tip is to schedule your payments. This is going to help you understand when payments are due to ensure you have cash to make those payments. Not all payments are created equal, so look for ways to maximize your cash flow by prioritizing your payments in 3 categories. Your first category is your must-pay category. This is going to be your taxes, your rent, things that you must pay to keep operating. The second category are your important-to-pay items. This may sometimes be your utility bills, your insurance payments that have a penalty-free period, in which cases you might want to take advantage of this because it allows you a little bit more flexibility. Payment is flexible is going to be your third one. A lot of vendors and suppliers are happy to work out a flexible payment plan. Just be honest with them, keep communication open, and pay it at agreed upon time. A smart tip is to interview a new vendor and ask them about the different payment options that they provide to their clients. Let's continue with keep up on cash coming in. The fourth tip is to keep up on cash coming into your business. It is important for business owners to actively manage the money coming into the business. When we refer to cash coming in, this can be in form of checks, cash, or card payments. You receive each one of these as liquid into your account, meaning it's available for quick use. The speed at which you get paid has a large impact on your cash flow. Businesses may have a short cycle, like a retailer or a stylist, or a long cycle, like a manufacturer or a contract professional. No matter your sales cycle, you will need and want to get paid as quickly as possible. To do this, you want to make sure you establish clear terms of payment ahead of time. Most new businesses are required to pay their vendors in cash. After you develop a reputation for paying on time, ask vendors to invoice you instead of paying with cash. This allows more flexibility in repayment. Make payments due before you need them. So, for example, if you want a payment in 1 month, make your term 14 days. That gives you a buffer for late payments. Analyze your costs and offer a payment in advance to incentivize faster pay. This might reduce how much you actually get paid, but it's going to accelerate the money that's actually coming in. Have a process in place to follow up on open invoices. So make sure you stay on top of your invoices that you send out and make sure you follow up to ensure that they are paid on time. Your financial institution may have an easy way to help you request payments and manage invoices. Look for faster inflows like same-day merchant processing or remote deposit capture. This can put funds into your account faster and can help you avoid unnecessary trips to the bank. It is never fun to get a call to collect money. Let's continue to cash flow scenarios. Now that we have explored 4 common ways to manage cash flows, we will take a deeper dive to use cash flow projections to understand their applications and potential uses through a few scenarios. And again, Olivia, I'm going to go ahead and stop us here. Are there any questions for us?
I do have one. Can you give examples of incentives so that vendors pay quickly? Any recommendations?
So Eddie, Eddie might have a few more tangible examples of businesses that he might have come across. I know one of them would be maybe a small discount on the inventory that's being purchased.
Mm-hmm.
Yeah, no, that's a great question, Olivia. And you know, a lot of vendors, you know, offer terms, right? If you pay them early, and that's a nice tie-in actually to Jason Spriggs, who is our credit card, solution specialist, who will be speaking in a couple of slides down from now. We haven't had a chance to introduce him officially, but that's one of the areas that he's going to cover, and how to maximize and take advantage of some of those trade discounts that you get from some of your vendors as well. Yeah, definitely want to take advantage of that. We got some creative ways to do that. So just hang on tight, and we'll answer that just in a few slides or so.
Okay, and then someone did ask a question. Do banks require financials to be audited by an external auditor?
You know, it depends on the size. It's a great question. It depends on the size of the loan and what the what the entity is, right? Typically, if you're looking at maybe like a nonprofit organization, they would require audited financials, right? For for a certain size loan. But for any type of industry or any type of business, right? It really depends on the size. I want to say that I think for us is it's if we're talking about a credit deal north of I don't know, a few $1,000,000, then that might be something that we might ask for some audit financials to get some more detail on that, right? But typically, just the either company prepared interims and tax prepared financials is more than sufficient for a lot of requests, really, right? So to answer your question, Olivia, the answer is it depends. It really depends on the size of the loan and the complexity of the client, right, and what they do. But for the most part, just your regular file tax returns is more than sufficient for us to get a lot of credit deals done here at the bank.
Yep. Yeah. One more question. If the entity is generating less than $1 million in sales, I guess that attributes back to audit financials. And in my experience, in a nonprofit sector, even those nonprofits that have revenue of under $1 million do get audited. Especially when you're public and you're held responsible because you are a steward of money for the community.
Yep. That's right. Yeah, that's right. Yeah, so nonprofits are required to get audited on their returns, right? So that is correct. Yeah, and we would take those to basically look at deals, right? It's not a bank requirement. It's just basically that's part of the nonprofit's nature of business. So yeah, I guess in that part, yeah, they would be audited. Correct. Good questions.
Yeah. So let's go ahead, and now that we've explored 4 common ways to manage your cash flow, we're going to take a deeper dive into the use of cash flow projections to understand the applications and the potential uses through a few scenarios. So cash flow projections are beneficial for implementing potential strategies for common cash flow challenges. If you're having cash flow challenges, review your balance sheet and cash flow statement to identify that challenge. Cash flow projections can be helpful to help you identify or determine the cause of your cash flow challenge and look for ways to overcome those gaps. Here's another quick tip. Partner with your banker to help manage your business cash flow and choose the right strategy to keep you on track. Now we will look at a few cash flow challenge scenarios that may apply to your type of business and how to overcome them. So let's review the first scenario. This is going to cover lagging payments. Ellen and her husband own a parts and repair shop for specialized digital office equipment. Ellen was looking through her cash flow projections and noticed that they were not receiving payments from some of their smaller accounts. as fast as they need to buy more parts moving forward. So here are a few ways to either tackle the problem or bridge the gap until your customer payments are received. Some possible strategies may include customer payment discounts. So if your clients have a 60-day payment window, offer a small discount if paid within 30 days. Having deferred payment options, so consider deferred payment options like accepting credit cards or electronic transfers. This will decrease the wait time if your customers are mailing checks or paying cash that you have to physically take into the bank. Credit cards. In addition to buying your business credit score, to building your business credit score, and often offering rewards, business credit cards can help you a pinch. And Jason today will help us and share a little bit of the credit card options that we have available for US Bank to help you with that. Before I introduce it to him, or change the call over to him, last but not least, lines of credit. We don't utilize these enough as a business, and sometimes when we request them, it may be a little too late. Take out a line of credit before your business needs one. I cannot reiterate that enough. Jason, if you're on today, would you like to share some of the credit card options that we have available for to help the scenario of lagging payments?
Of course. Yes. Thank you, Elizabeth. Can everybody hear me?
Yes.
All right. Perfect. So my name is Jason Spriggs. I'm with the High Value Business Credit Card team for US Bank. And just as Elizabeth was kind of alluding to, what we're seeing right now is a rising rate market. And with the rising rate market, banks have gotten a lot more creative in regards to their financing and what we're able to provide and what we're able to offer. So most banks have actually updated their credit card portfolio or their credit card suite as far as offerings. So what we're actually seeing now is, as Eddie was mentioning, is there's numerous like 0% offers that weren't out in the past, and these allow you for vendor discounts, excuse me, preferred terms on purchases, or even balance transfers to help you out. So we also have opportunities to use the credit card to protect your existing funds within your checking account. This can help you against fraud, by using the card and not spending time in the branch to get a new checking account open or have to rearrange all your terms with your existing vendors. As far as what we have to offer currently, the product suites have gotten a lot better.
If I were to add to that, Jason, as well is, I think a credit card is a very useful tool to really help manage, cash flow in general. And, we have the chamber in general, works with a lot of different organizations, and I think we're gonna hear from Delta later as well. But a lot of different organizations, to help with the cash flow, right? And I think we have a suite of really great cards, and it's not a one size fit all deal, right? What part of what we do is really try to understand, the respective business, ask some few questions to really make sure that we get the right card program in place for your, for your business, right? So that's just an additional resource that US Bank is able to allow, right? And as you can see, it really does meet some of these cash flow challenges that you have with the lagging payments or taking advantage of vendor discounts and that good stuff, right? But yeah, just wanted just a quick plug on the US Bank's capabilities around that and how that that manages to cash flow. But any other thoughts, Jason? Anything else that I missed?
The other thing that we're seeing quite often now is the rewards programs are just astounding when it comes to these credit cards. So we're seeing these large level companies come through, or even the mid-sized companies and small business coming through and really utilizing the reward programs that are on their cards, whether to save money on travel, or we're seeing clients that are adding them up throughout the entire year, cashing them in at the end, using that for equipment purchases, using it for employee bonuses, gift cards, anything along those lines. But as far as the reward suite for most credit card products, they have become phenomenal and just an additional asset. And then also, if you're speaking with your CPA, there's creative, there's ways to actually use those rewards and, enhance the business's overall revenue, just by spending the money that you're already going to be spending from a day-to-day type situation. So by looking at the expenses that you're paying every single month for your checking account, transitioning those over to, a credit card through any bank or any financial institution, you're protecting your accounts against fraud. You're putting yourself in a better financial situation by extending the time that you're able to retain your cash, but then also earning potential rewards to better yourself in the future. So the credit card suites have just become phenomenal. And I highly recommend that, if you're having any issue with financing, talk to your bank, talk to your local banker, talk to Eddie Reyes, talk to Elizabeth, and let them know, hey, we're experiencing some cash flow situation where we really need some help. And that's where individuals such as myself come in, and we really work to put you in a better financial situation overall.
Awesome. Thank you, Jason. And before we go back to Lisbeth, Olivia, is there any questions on that topic?
Yes, there is. There's a couple questions. What are the similarities or differences between charge cards and credit cards?
Yeah, perfect. That's a fantastic question. So what you'll see is pretty often, like, the charge cards are going to be some of your larger cards, like your Amex. Everybody knows that Amex Black card. It's really cool. It's metal. It makes a cool sound when you throw it on the table. But those type of cards, a lot of times what you'll see, those are actual charge cards. And if you look back historically through banking, charge cards were the first edition of an actual credit card. And what the purpose of a charge card was to separate the purchases from your actual bank account. And so a charge card is due every single month in full. You have to make that payment in full. There could be penalties if you don't do so. A credit card will allow you to retain a balance on that card, and you can pay that off in a few months or however is comfortable for your situation. A great question.
Yeah, and then the other question is from Tim. Thanks for the presentation. I don't borrow money or take out credit cards. Do you offer reward programs on debit cards with bank accounts with higher balances?
So what you can take a look at is sometimes MasterCard, Visa will offer certain reward programs for debit cards if you go through them directly. As far as the banks, we do not offer them currently. But what we are seeing are people in very, very similar situations that, I've never had a credit card. I've never owed a cent of debt to anybody. And that's phenomenal because that means you're very, very cash positive and you're in a good situation. But also you can be doing yourself a disservice by not reaping the rewards of just utilizing the credit products as they're intended. So if you have a situation such as a charge card that you're going to be spending money on every single month, go ahead and spend that money, but pay it off every single month before that due date. Eliminate any interest that you would ever pay on that credit card and earn the rewards that the banks or the financial institutions are giving you, absolutely free. That's what they're there for. So use it in a smart sense, and you can actually become cash positive by using debt.
Yeah, I just to go quickly, just a quick story. I had a client not about a year ago, basically put all of his expenses on his charge card. It's very similar. Didn't like to borrow a whole lot, but we talked about a card program. Puts all the expenses, all of his equipment, all of his vendor payments, all that good stuff. And once a year, he gets a nice little check at the end of the year and takes his family to vacation. So yeah, there's some upside of doing it that way as well, right? But again, it's not a one size fit all, and the value that we can provide is really just understanding your business and what you got, what you do and what you do on a regular basis, and if it fits for you, right? And if it fits, then we can definitely make some recommendations as well. Cool, awesome. Olivia, any other questions before I go back to Lisbeth?
That's it for now. Thank you.
Awesome, thank you. All right, Lisbeth, back to you.
Thank you, guys. Those are all such great questions. I encourage you to please continue to ask, and hopefully we'll be able to get to all of them. But thank you for those. Next, we're going to go ahead and cover scenario 2. This is vendor payments piling up. We spoke a little bit about this when Eddie and Jason talked. Let's go over this example. So Jane owns a small boutique gift shop. A portion of her customers place their orders online, and she receives deep discounts when she buys in bulk. After reviewing her cash flow projections, she realized some of her invoices are piling up. If you are having difficulties making payments to your vendors due to lack of cash on hand, consider some alternative options to pay to meet your obligations. Some possible strategies include vendor financing. Ask the vendor for a cash price. This may either provide you a discount for paying early, or provide options to pay over an extended time. Accessing a line of credit. Having a line of credit on hand can be useful, especially if you need to pay your vendor before your receivables come in. Financial institutions can often provide a better rate for financing than a vendor, or you can reuse the line of credit when the need arises again. So we did cover a little bit about lines of credit and the importance of having them prior to actually needing them. Lines of credit tend to have a lower interest rate than a credit card, and you can also withdraw cash from them. So if your vendor gives a discount for you to pay in cash, definitely a line of credit would benefit you. You can get a line of credit as little as $500 up to a line of credit of $250,000 and even beyond that. So just to give you an idea and to put this in mind, you might want to inquire about how those work. We can go over the third scenario, and one that is probably suitable for many of us is having too much debt. Eric has a custom cabinet making business, and his high-end clients often require specialty woodworking materials. Because of recent changes in the supply chain industry, Eric found that he had to keep a larger inventory on hand for his costly materials. After reviewing his cash flow projections, he discovered he had accumulated quite a bit of debt. If you are having difficulties with a large amount of debt in your business, consider some alternatives to help you meet your obligations. Some possible strategies may include paying down the debt. So, of course, we all want to do that. A strategy for tackling debt likely depends on how long you'll need to pay off the balances. So if this is going to take you less than a year, if you can pay down your debt in a few months, consolidating into a low APR credit card or a line of credit may be a good option. So look for those 0% interest rate credit cards for 18, 24 months. If it's going to take you more than a year, you may look towards a term loan that will allow you to group smaller payments into one larger payment. Loans are secured by assets like either equipment or real estate. Those types of loans generally have a more favorable interest rate. Avoid overextending the business. Be sure to understand the debt and seek ways to avoid overextending the business now and in the future. You want to make sure your future cash flow will be able to cover your expenses, including any new debts you may come across. Always make sure to pay your debts in a timely manner. Ignore the debt or avoiding payments or calls from creditors is not a solution. They will hunt you down and it'll affect your credit for a very long time. Other credit options, there is also other loans available for working capital or cash infusion loans. These are intended to help the company overcome a rocky path or accelerate growth. So today, I just want to thank everybody for attending. As we review some common considerations for growing your network, here are some key points to remember. The importance of tracking your money. Financial management tools can keep us organized, and they are a critical component to managing your small business. Cash flow projection statements. It is important to manage cash flow of the business to ensure that money coming into the business during a given period is enough to pay the expenses when they come due. And last but not least, cash flow scenarios. The cash flow scenarios allowed us to take a deeper dive into the use of cash flow projections to understand their applications and potential uses. Does anybody have additional questions, Olivia, on the chat box that we can answer before we provide additional resources that may be helpful to some of you?
No, at the moment, we don't have any additional questions. Thank you.
Okay, awesome, thank you. So the next slide is going to provide additional resources. I do encourage you to take a screenshot of this. These are additional resources available to all small business owners. A lot of you may be familiar with the SBA, for the America Small Business Development Center Network, the Women's Business Center. These are great centers that provide technical assistance to business owners as well. And your local U.S. bankers, goals coach, your business access advisors. We are here to support you and guide you on ways to manage your cash flow. Thank you, LA Latino Chamber, for having us here today and having US Bank represent. We really appreciate this time.
Well, thank you, Liz, Eddie, and Jason for the insightful information. And I hope everyone had great takeaways. At this point, I'd like to introduce and welcome Maida Braga, who's an account executive at Delta Airlines. And she has some great offers for small to medium-sized businesses on how to gain points for travel for you, family, and loved ones.
Right now, American Express, we're doing a promotion. So if you apply for the credit card today, you can get up to 100,000 miles. That is a free trip to Europe just for you to enroll on the credit card. So I will share the link with you. Make sure that you all take advantage of that. I also want to share two other programs that we have. Loyalty program. The idea is that every time that you fly with Delta or our airline partners such as Aeromexico, Air France, KLM, Korean Airlines, LATAM, and many others, you get miles as well, and you can redeem those miles in different perks like travel credits, upgrades, seat assignments, getting priority check-in, and many other perks. This is a free program to participate. There is no commitment. The miles never expire. So make sure that you enroll that, take the benefits, start flying with us from spring break. And you can get the miles not just flying with Delta and airline partners, but with many other partners that we have. So with Lyft, Hertz, National, Airbnb, Alamo, and even Starbucks. So if you connect your Starbucks account with Delta, you get miles for every single coffee that you drink. So take advantage of that. And last but not least, I also want to share a program that is called Sky Miles for Business. This is dedicated for small and medium-sized companies. The idea with this program, it's pretty similar to the Sky Miles, but for your company. So every time that one of your employees, they travel for work, the corporation gets the miles. The employee will get the miles themselves, and the company gets it too. So it's double dipping. Make sure that you don't leave any free money on the table. Enroll today. The miles also don't expire. So take advantage of that. Start flying with us and take the benefits so you can save a lot of money and get all the perks with us. I will share my contact detail in the chat and all the information about the programs. Thank you so much.
Thank you, Maida. Gratitude to US Bank, to Delta Airlines, and to you, our members and community, for helping LA Latino Chamber be your #1 Latino chamber in all of LA County. So thank you and goodbye.